If you've been hunting for a penny stock that could potentially explode in the coming months and turn a modest investment into something life-changing, then you're in the right place. Every now and then, the stock market offers a golden opportunity hidden behind the noise stocks that most people overlook simply because they're priced low. But here's the thing, price doesn't always reflect value. Some penny stocks trade at a discount not because they're weak or failing, but because the market hasn't yet caught up to their real potential. And that's where smart investors make their move. They get in early, they research deeply, and they ride the wave before the masses even realize it's coming. These stocks may not be on the front page of financial news right now, but they have all the ingredients of a breakout. So today, we are diving into a penny stock that has the potential to make you rich. This isn't just a speculative ticker on a screen. This is a company with real operations, real revenues, and real growth drivers that can make a huge difference to your portfolio if you play it right. These aren't random shots in the dark. These are stocks backed by solid fundamentals, a strong business model, and in many cases, the confidence of Wall Street analysts who see what's coming before the rest of the world catches on. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. Now let's get into it. The stock we're talking about today is Custom Truck One Source Incorporated, trading under the ticker TOES on the NYSE. This company is not your typical penny stock story. It's not a biotech hopeful with no revenue or a small cap trying to ride the wave of the latest trend. This is a company with physical assets, real infrastructure, a diversified customer base, and a business model built to weather economic cycles. Headquartered in Kansas City, Missouri, Custom Truck One Source has built itself into North America's premier provider of specialty trucks and heavy equipment. They do it all: sales, rentals, leasing, customization, parts, servicing, and even financing. Founded in 1988, the company has decades of experience and a deeply entrenched presence across North America. And in 2025, it's not just surviving, it's growing. In their most recent earnings report for Q1 2025, Custom Truck reported $422.2 million in total revenue. That's an increase of 2.7% compared to the same quarter last year. The headline numbers don't stop there. Their Equipment Rental Solutions segment, also known as ERS, saw a 13% year-over-year revenue increase. For context, the ERS segment is crucial because it represents their rental business, a high-margin, recurring revenue driver that thrives on fleet utilization. In Q1, they pushed fleet utilization to nearly 78%, a marked improvement over last year. That means more trucks and machines were out in the field generating cash, and less were sitting idle. They also reported an original equipment cost, or OEC, of $1.55 billion, the highest in company history. That figure represents the value of their rental fleet, which essentially functions like a revenue-generating machine park spread across North America. Despite macroeconomic headwinds and some short-term pressure on gross profit, which dipped 5.7% to $85.5 million, the company managed to increase its adjusted gross profit to $135.6 million. And yes, while net losses widened to $17.8 million in the quarter, the company is investing heavily into its future, expanding its fleet, growing backlog, and securing new orders across its core end markets. Speaking of backlog, Custom Truck ended the quarter with over $54 million in backlog, an increase of 14% year-over-year. During the same quarter, Custom Truck also hosted its annual meeting of stockholders on June 12th, where they confirmed the election of 4 Class C directors: Fred Ross, Georgia Nelson, Mary Jackson, and Ryan McMonagle. This continuity in leadership is important because it signals stability and long-term strategic alignment. Ryan McMonagle, the company's CEO, has been very clear about their growth plans and sees major tailwinds ahead. He cited ongoing momentum in the core transmission and distribution, T&D, markets, and strong sales performance in the TS segment, which covers new and used equipment sales. These aren't just words. The data backs it up. They're seeing strong order flow and continued customer demand across vocational vehicle markets, meaning they're not just waiting for business, they're actively growing it. Let's break down the investment case from a stock price perspective. Right now, Custom Truck is trading at $5.14 per share. That's still within the range most retail investors consider accessible, especially for those looking to build positions over time. According to 8 Wall Street analysts covering the stock, TOES carries a median price target of $5.50. The range runs from a low of $4.50 to a high of $7.50. Even at the median target, we're looking at a 7% upside. But the high-end forecast, which comes from Tammy Zakaria at JP Morgan, sees potential upside of nearly 46%. That's substantial for a stock at this level. And even more notable is that there are 0 sell ratings. The consensus is neutral, with 3 buys and 3 holds. That suggests the downside risk is relatively contained, and most analysts are watching to see how the company continues executing in upcoming quarters. Let's be clear, this is still a high-risk, high-reward play. The stock has a beta of 1.19, meaning it's more volatile than the market. Investors should be prepared for swings. But volatility is not necessarily a bad thing, especially if you're looking for growth. The bigger picture shows a company investing heavily into long-term infrastructure trends and operational expansion, which could pay off massively if execution continues at this pace. Looking further into the future, there are several long-term growth catalysts that could drive the stock much higher. First is the ongoing push toward electrification and the modernization of the power grid. As more EVs hit the road and more homes become dependent on electricity for heating, cooking, and transport, utilities will have to invest heavily in transmission infrastructure. Now, let's not forget, stocks don't go up in straight lines. There will be challenges. Tariffs, supply chain pressures, and labor shortages can weigh on short-term profitability. But with a strong leadership team, expanding backlog, diversified customer base, and secular tailwinds, Custom Truck One Source is better positioned than most to weather those challenges and keep growing. Well, that concludes our list for today. If you found this breakdown valuable and you're serious about building wealth through smart investments, make sure to subscribe, like the video, and turn on the notification bell so you don't miss any of our deep dives into the most promising stocks in the market. Stay tuned, stay sharp, and keep investing smart.